of contributors as well, and we just had that on the screen in front of you. L&T, Bharti were just some of the big contributors. Metals and defense was really where a lot of the gains were clocked, in fact, in trade today. And you can see that on your screen as well. 3.2% higher on the Nifty Metal Index, the Nifty India Defense Index up 2+%. Consumer durables, oil and gas, those were the, in fact, oil and gas, energy, those pockets were the pockets which have been doing well of late in any case. Realty, banks, they all simmered down, as he said, towards the fag end of the session. IT and auto was the other big loser. Maruti, M&M were some of the big losers in trade today. But let's just hold the thought with regard to the day of trade of Wednesday. Let me, in fact, try and contextualize, and that's what Ashesha has done, in fact, with regard to what has happened to portfolios. And if you believe that yours is the only portfolio that's bleeding, you're definitely not alone. Markets have stayed volatile over the last few days, in fact, last few trading sessions. But what's making investors nervous? And why is the street on edge in the last few trading sessions? Ashesha here to break it down.
Indian equity markets were under pressure for the third consecutive day today, and look at the kind of fall that we have seen. Nifty Banking Index has declined more than 4% in the last three trading sessions. Nifty down 3.5%. We have small cap and the mid cap index which have declined more than 3% over the last three trading sessions. So what is leading to this? We have jotted down 10 points, the possible reasons as to why the market has been declining over the last three trading sessions. The first and the most important one is the West Asia crisis. There has been no respite on the geopolitical front whatsoever. We have seen comments coming from both the parties, but clearly there has been no respite on this front, and that continues to weigh heavy on Indian equity markets in line with what most other Asian and emerging markets are doing globally. Let's also talk about a couple of other factors then. And crude, that's the most important one, especially for a country like India, which relies on imported crude to meet 80 to 85% of its crude oil requirements. Crude continues to sustain above that $105 per barrel mark, and this is likely to weigh heavy on forex reserves, and that is also likely to weigh heavy on India's current account deficit, which has been a concern for the last several months. So crude is another big factor which is weighing heavy on your portfolios. Now remember, we had some comments that came in from Hardeep Singh Puri yesterday, and he has not ruled out a fuel price hike. So concerns around petrol and diesel price hike is another concern. And remember, oil marketing companies have been bleeding. They have been absorbing the losses of surge in crude oil prices in the global market. But if at all that is passed on to the retail consumer, then that continues to remain a concern. And this is likely to weigh heavy on inflation as well. So wholesale and retail inflation, that's another important factor that you need to watch out for because petrol and diesel contribute nearly 5% of the inflation basket in India. Widening current account deficit continues to remain a concern, as I mentioned, especially on the back of increasing outflow of forex from our country. And that is the reason Prime Minister Narendra Modi has now urged citizens to go ahead and reduce foreign travel. So current account deficit is another concern that you need to watch out for. Shifting focus to a couple of other factors then. Remember, a whole host of brokerage houses have gone ahead and cut their GDP estimates for India, HSBC being one of them. They've cut their FY27 GDP estimates to 6% now versus 7.4% earlier. So clearly, concerns around consumption are weighing heavy, and that is the reason brokerage houses are now cutting their GDP estimates. Let's also talk about consumption. And remember, rural India continues to remain a problem when it comes to consumption. And this time around, southwest monsoon is expected to be below normal. Other than that, West Asia crisis has already had an impact on fertilizer prices, which is weighing heavy on agri-economy of India. So that is another factor. Consumption, especially in rural areas, is likely to be weaker this time. Reduced hopes of aggressive rate cuts on account of sticky inflation that is likely to persist for some more time on account of surge in crude oil prices. So that's as far as rate cut is concerned, not only by the Federal Reserve, but by the Reserve Bank of India back home as well. Moving focus then, let's talk about the rupee, which is at a fresh record low versus the US dollar. Yesterday, remember, it hit that 95.63 mark. That also is another concern because rupee has been depreciating for the last several months, and that trajectory is continuing as we speak. Let's also talk about the last two parameters which are weighing heavy, and one is FII outflow. Also because dollar is now becoming more attractive as compared to Indian rupee, at a time like this when there is global uncertainty, FIIs have withdrawn as much as 20,000 crore worth of shares in the month of May so far. So FII outflow and FPI outflow also continues to weigh heavy. Lastly, let's also talk about another parameter which is weighing heavy, and that is AI. Remember, IT stocks have been under pressure on account of various versions and various models of AI that have been launched in the global world. So AI is another factor that continues to linger and weigh heavy on Indian equity markets.
Okay, Ashesha, thanks so much for taking us through that. So that's all the reasons why everyone's portfolio on an average has been seeing a beating in the last few weeks of trade, or slightly even more than that. But let's refocus and welcome on board Mr. Ajit Mishra, the Senior VP of Research at Religare Broking, who's joined us to give us a better technical sense on the markets. Ajit, hi, good afternoon. Good to be chatting with you. Give us a sense of how you've read the market move that we've seen on Wednesday. Started pretty okay, held on to a gain of about 0.5% for the most part of the trading day, and then there was some profit taking seen in the last 10 or 15 minutes of trade. How should one be reading this? And more importantly, on the back of this, how should one expect the markets to behave on Thursday, which is the weekly Sensex expiry?
Yeah, good afternoon, Snehi. Snehi, yes, it was a breather, but not a very decisive one. Means after 4 days of slide, and in fact, the last trading session was critical because we were hovering in this band 23,800, 24,500 for almost 3 weeks. And in the last trading session, it was a decisive breakdown, and the gap area that we have is still unfilled. Though we are very close to that, closure of this gap as well. Means 23,150 is the gap zone that we have on the daily chart for the Nifty. So after almost inching closer to that mark, we saw that market witness a bit of a rebound or respite in the early hour. But it failed to hold those gains thanks to the continued underperformance from the banking and IT wagers. So indications, especially for the index, seems like the sell on rise approach is something that one should continue with, considering the range breakdown and the overall texture of the two of the key sectors, banking and IT. So any rebound towards 23,650, 700 zone can be considered as a shorting opportunity, with 23,800, 850 being the stop area and positional target of around 23,100 or lower. Banking as acting as a critical factor which is putting pressure. We have more room on the downside in banking index because the gap where we have this support placed is around 52,800, which is roughly around 500, 600 points more from the current levels. So both the indices, Nifty and banking index, are likely to face pressure on rise. So, and tomorrow being the Sensex expiry, we expect volatility to remain high due to the oversold position, but the overall tone is likely to remain on the negative side.
Understood. Overall tone is negative. Your picks, therefore, in a market like this, what are your picks for Thursday?
So, Arch, metal, energy, select energy counters, pharma, healthcare, we are focusing largely on these pockets when it comes to the strength. And basis that, JSW Steel is where we see the potential. Means almost all the metal counters were contributing to the move. After almost 10 days of consolidation in a tight band, we anticipate the next leg of the up move to unfold in JSW Steel. So 1330 is what we are eyeing as an immediate target. So with stop at 1240, one can go long in JSW Steel. While IT majors, they are yielding under tremendous pressure. We are seeing newer lows with every passing day. So Infosys is a shorting candidate. A fresh breakdown from the tight range. The previous swing low also got breached. So 1040 is what we are eyeing as the immediate target. So with stop at 1165, one can go short in Infosys.
So that's the take coming in on some of the picks and the recommendations. On that note, Ajit, thank you so much for taking the time out and speaking with us.
Thank you.
Okay, let's refocus then. And the government has sharply raised the import duties on gold and silver to 15% from 6% earlier, and in a major move aimed at curbing precious metal imports and protecting forex reserves. This decision comes just days after PM Modi urged citizens to avoid buying gold for a year in the national interest. What does this mean for the sector and the economy? Ashesha is joining us with the insights.
In line with Prime Minister Narendra Modi's appeal to go ahead and reduce gold purchases for the next 1 year, the government now has come out with a notification where they've gone ahead and increased import duty on gold and silver imports from 6% earlier to 15% now, which is an increase of 9 percentage points. And this is in sync with what Prime Minister Narendra Modi alluded to over the weekend, because this is weighing heavy on India's forex reserves. So in order to curb forex outflow from India, the government has now gone ahead and increased import duty on gold and silver. So why has the hike been done? 4 important reasons. One, as I mentioned, to curb rising imports. It will now go ahead and put lesser pressure on forex reserve, which has been the case for the last several months. It will help in narrowing India's trade deficit, and it will also support the weakening rupee. Remember, Indian rupee hit a fresh record low yet again versus the US dollar at about 95.63. So these are the 4 primary reasons which the government is trying to put some lesser pressure on. Let's also talk about the breakup of the import duty. Now, the basic customs duty earlier was 6%. It has now been revised to 10%. This takes the total effective duty from 6% earlier to 15% now. Remember, additional agriculture cess has also been levied to the tune of 5%, and hence the effective duty now goes up to 15% from 6% that the government was levying earlier. So that's as far as the breakup of precious metals duty is concerned. Let's also talk about the quantum of gold India imports over the last 4 years. Remember, India imported gold worth $38 billion in FY23. That shot up to nearly $60 billion in FY25 and $75 billion in FY26. As a percentage of total imports, gold imports contribute about 5%. That's the figure as of FY23, and that has risen to nearly 5% in FY26. That's the total quantum and the percentage of import of gold that we do as a percentage of total imports that are being done into India. Let's also talk about a couple of other parameters and how it is likely to have an impact on jewelry stocks, and we are already seeing negative reaction on many of these counters. Higher gold restocking cost is likely to weigh heavy on their profitability. Demand slowdown continues to remain a concern. Remember, many of these associations have already highlighted that because of Prime Minister Modi's appeal, they've seen a slowdown in footfalls over the last 2 days. Margin pressure for unhedged players and wedding demand is likely to get deferred. Remember, we are in the thick of summer wedding season, and that demand is likely to get deferred as a result of this import duty hike and consequent increase in gold prices that we are seeing in the domestic market. But we'll see a shift in trend. Heavy gold jewelry will now see a shift in consumption, and lightweight jewelry format could perhaps get more demand. Lab-grown diamond categories and diamond-studded jewelry makers could actually benefit as a result of hike in import duty that has been done. So that's the shift in demand that we could perhaps see as a result of hike in import duty. So yes, the government has gone ahead and hiked duty, and this is likely to weigh heavy on jewelry makers, but perhaps a shift in trend could do some bit of lesser damage to these jewelry makers.
Well, thank you so much for that, Ashesha. In fact, precious metal stocks have been in focus for the last few days, and the industry warns of higher prices and demand pressure as a result of that. We spoke to a slew of experts on this, as well as, of course, companies on this as well. Listening.
The volumes, imports, the volumes would take a hit. We've seen it over the last 2-3 years. Whenever prices jump, people look for lighter weight jewelry. People want to buy jewelry within their budget. So there could be an overall impact of 10 to 12 to 15% in terms of reduction in volume. So these are the two things. So the need of the hour, looking at the economy, looking at the situation, I'm sure that this step by the government would help in increase of exchange of gold and reduction of volumes and imports.
In a way, it's positive for the growth because the loan to value goes up.
Yes.
And the purchasing, basically how much borrowing customers can do, they have a more leeway there. And in an environment where many of the MSME businesses will be impacted by supply chain and the inflation, probably they'll need more working capital. So this is very handy at this point in time. So as far as gold loan industry is concerned, the total value that it can lend goes up. How that is utilized is between the borrower and the lender. So lenders want to be conservative, they will not release the entire thing. And the borrowers also probably, based on their need, will have a higher capacity to borrow.
This increase in the import duty, I think our top line would look much better. But the point is, it's really the domestic production. And actually, we are only 2 or 3 producers in this country. That includes Hatti Gold Mines and ours. But the important thing that we need to remember is every ton that is produced in India will reduce almost 1,500 crores of import burden on us. So there is a definite need to increase the domestic production.
With this increase of duty, that definitely a big panic situation across the market. But we had a long meeting with stakeholders yesterday with Tanishq, Malabar, Kalyan. I was trying Mr. Sohankar, but he was not available. And we have asked time with the Prime Minister, but as he's traveling between 15th to 20th, we have discussed several solution that by increasing duty, we will not be able to serve the purpose of reducing the import. As we have seen 2 years back, this duty structure was there, and there was no reduction in import.
Okay, so that's a word coming in from a bunch of managements as well as experts who have their view on this custom duty hike that we've seen on gold and silver. Now, that was the view on gold. Let's talk about silver. Silver prices are becoming an important monitorable for India's EMS space. From PCBs and soldering to semiconductor packaging, silver remains a key input item across electronics manufacturing. Mithali is here with more and, in fact, the impact of this custom duty hike on silver. Mithali.
Right, so India's decision to raise the custom duty on both gold and silver from the earlier of 6% to now 15% could actually have a second-order impact, particularly on the EMS companies. Talking specifically about silver, it remains a key input across the printed circuit boards, soldering and SMT assembly, electrical contacts and relays, and semiconductors and chip packaging. The immediate concern, however, is not the demand destruction, but the rise in the input cost inflation. For EMS players, higher silver prices can gradually impact the bill of material cost, the gross margins, working capital cycles, inventory planning, and also the procurement efficiency. The impact, however, will vary based on the company's product mix. Among the listed EMS companies, let's have a look on how it's going to impact. So starting with Syrma SGS Technology, it appears relatively more exposed, an estimated silver content of around 1.5 to 3% in its BOM, that is the bills of margin, or the raw material cost. The Keynes Technology company, it may also see some moderate sensitivity given its presence in the EV electronics, the aerospace system, power electronics, and also semiconductor packaging. Talking about Avalon Technologies and Cyan DLM, they carry selective exposure through high reliability and also defense-grade electronics manufacturing. Now moving to the consumer electronic-focused players like Dixon Technologies, Ember Enterprises, PG Electroplast, they are comparatively lower on the silver intensity curve due to the scale assembly-led business models. But if the silver prices remain elevated, could actually impact the margins for these companies as could become visible, particularly in the high precision PCB incentive and also semiconductor linked EMS segments.
Okay, thank you so much for that, Mithali. The other one which will also be in focus for the day of Thursday is Tata Motors PV, all set to report Q4 numbers. Good expectations this time around is what we're penciling in. The PV major expected to turn profitable on a QOQ basis. Srishti here with all of the details.
Well, this time around, we're expecting a good set coming in from Tata Motors passenger vehicles, wherein it was not just the standalone entity that was doing well, but a good rebound or a recovery in the JLR business and volumes is what we have seen. Because do remember, Q3 was a complete washout on the back of the cyber attack. Let's talk numbers then. And firstly, on the revenue front, when we look at the consolidated numbers, we are expecting a jump of close to 58% on a quarter-on-quarter basis. EBITDA expected to be above 10,000 crores. While the consolidated margins are expected at 9.3%. And yes, this time the company is expected to report a profit of over 4,000 crores versus a loss in Q3. Now, when we look at the internals here in the standalone, EBITDA is expected to improve to 7.1% to be backed by a good volume growth, while a 7 to 8% increase in the average selling price. But JLR EBIT margin will be the critical to watch out for, because this time a 7.3% is what we are expecting on on the EBIT front and going ahead? What is the outlook now standing for JLR? Because next financial year is going to be very interesting for JLR in terms of the new product launches. So what are their plans? What are their expectations? We will be watching all of that. But yes, all eyes on Tata Motors PV.
Okay, so that's the take coming in on Tata Motors PV and the kind of numbers that we can expect from that company on Thursday. But the other nifty candidate to watch out for is going to be JSW Steel, also all set to come out with its quarter four earnings, where the street is expecting steel realizations to increase on a sequential basis. What else is the street penciling in, and what are going to be some important factors to watch out for when the numbers do come out on Thursday? Ashesha is here to take us through all of that. Ashesha.
Well, yes, we are expecting a strong set of numbers from JSW Steel this time around in the fourth quarter. Remember, most steel companies had undertaken price hikes in the fourth quarter, and that is likely to benefit realizations and spreads in the fourth quarter. As far as revenue is concerned, we are expecting that to come in at about 49,600 odd crores, which will be an increase of 8% on a sequential basis and about 11% on a year-on-year basis. EBITDA is, we are expecting a jump of about 30% both on a sequential and on a year-on-year basis when it comes to EBITDA, and margins could come in at about 16.9%. As I mentioned, steel prices in the fourth quarter have risen, because of which realizations could increase by about 7 to 7.5% on a sequential basis and about 10 to 12% on a year-on-year basis. Yes, raw material prices too have risen. We have seen coking coal prices rise by about 10 rupees per ton in the fourth quarter, $10 per ton rather in the fourth quarter, and that could slightly weigh heavy, but the price increase more than offsets the increase in raw material costs, and that is the reason both on a sequential and on a year-on-year basis we are expecting strong set. Now remember, management commentary around cement, around steel pricing, around steel demand will be very crucial. Other than that, commentary on Bhushan Steel and Power stake sale will also be important, and around capex plans, that will be another key commentary that investors will be watching out for. But all in all, steel prices have risen, and that is likely to benefit JSW Steel's numbers in the fourth quarter.
Thank you for that, Ashesha. Of course, that positive tailwind with regard to steel prices is hopefully what will translate on those numbers. Meryl, though, here with all of the cues that you want to keep on your radar for the day of trade of Thursday.
Yes, now let's quickly take a look at some of the market cues for the 14th of May. Starting first with India, it's the weekly Sensex expiry and the wholesale inflation data, which is going to remain in focus. In the United States, the initial jobless claims and the retail sales data will be in focus as well. While in the UK, the GDP numbers will be watched by investors. On the global earnings calendar front, we've got names like Honda Motor, Suzuki Motor and Bath and Body Works going to remain in focus on the back of their quarterly results. And back home as well, it's quite a heavy earnings day. In the Nifty pack, we've got JSW Steels and Tata Motors PV reporting results. While apart from Nifty as well, the names that are going to remain in focus include United Spirits, HAL, Voltas, HUDCO, IRFC, all on the back of their fourth quarter results. Coming to the primary market in the on the IPO front, it's the Bagmini Prime Office REIT listing day. So do watch out for that. It's one of only India's 6 publicly listed real estate investment trusts. Finally, in terms of geopolitics, we've got the US President Donald Trump continuing his China visit up until the 15th of May. And while also the BRICS foreign ministers meeting in New Delhi also expected to continue up until the 15th of May. So these are 2 global events as well to watch out for on the 14th of May.
Okay, Meryl, thanks so much for taking us through that. Just taking a quick look at the Tata Motors PV numbers. The PAT is a beat.
Numbers.
Pardon me, Tata Motors CV numbers. The PAT is a beat, and you also have revenue and EBITDA that's in line. So we'll be waiting for the stock reaction on Thursday. But with that, we're completely timed out on this edition of Market Edge. From Harshmi and the team that put this show together, thanks so much for tuning in.
Top of the world with Times Network. And you're watching ET Now.
in association with SBI, the banker to every Indian truly.
Every business is like a piece of land. From the outside, it looks ordinary. The real truth lies beneath. Dig once, you uncover losses. Dig again, unexpected profit shines back. Sometimes it's the heavy chains of debt. Other times the break of fresh cash flow. But deep below, traps wait. And if you keep digging, you strike the jackpot. The real metrics, the real value. This is all about your company, where we dig deeper so you invest smarter.
मंडे आइएगा सब पेपर्स के साथ.
सारे पेपर्स हैं सर. How can I avoid multiple bank visits for my home loan?
नवनिर्माण के 9 वर्ष, प्रगति से परिवर्तन. Expressway State. Uttar Pradesh now accounts for 55% of the country's expressway coverage. That is why it is known as the Expressway State of India. In 2017, Uttar Pradesh had only 2 expressways. Today, 9 expressways are operational, while 4 more are under construction. 10 new expressways have been proposed. This means Uttar Pradesh will soon have a network of 22 expressways.
कि पिछले 9 वर्ष के अंदर डबल इंजन सरकार का परिणाम एक्सप्रेसवे का एक नेटवर्क, हाईवे, डिस्ट्रिक्ट वे और ग्रामीण सड़कों का 4 लाख किलोमीटर का एक बेहतरीन नेटवर्क हम सबको देखने को मिल रहा है.
The network of expressways in Uttar Pradesh has not only made travel faster and more comfortable for people, but has also increased productivity across every aspect of the economy. With the upcoming launch of flight operations from the Jewellery Airport, Uttar Pradesh will become the only state with 5 international airports. Currently, 17 airports are operational in the state, while 7 more are under development.
बहुत सुविधा अच्छी हो गई है. पूरे परिवार के साथ हम आज आए हैं. जो पहले सोच नहीं सकते थे, तो अभी आने का एकदम आसान हो गया है.
Not every story needs a debate. Some just need clarity. This is where we bring you a new show. Straight from the newsroom, where stories are shaped with a 360-degree perspective. Fast, focused, real-time. Newsify. Weekdays at 2 p.m. only on Times Now.
Onna, Randa, Munna, South Indian cinema varunu, ready-ya? Itu masalla, itu mega mass. Action, Huru limitilla. Screen fire amam, sure. Ninga whistle adikum.